We'll do a check on currencies. The dollar down a little bit, losing a little bit of traction on concerns over housing. We're going to be getting new housing numbers later on today, if I'm not wrong. Let's catch up with our friend Greg at ABN AMRO in Sydney. Hey, Greg Z, what's wrong with the dollar? What's going on? Actually, that's not the sexiest story in the forex markets today, is it? Or is it?
Yeah, look, I think commodity currencies is where the action is today, Bernie. Almost as much action as your powder blue suit. But, you've seen some pretty good runs from some of those commodity currencies today.
Okay, and that's...
Sorry, did I throw you?
No, you didn't throw me. You just made me realize I'm never going to wear the suit on air again. Which one? The Aussie, the Kiwi, the ZAR? Do you ever look at the ZAR, by the way? Is that sexy these days? Gold isn't anywhere near where it used to be.
Well, the Canadian dollar is interesting. It's broken an uptrend line in the dollar Canada since its low point in November. I think that's something to watch out for. It's trading close to its lows in the last month, just below the figure. Canada has underperformed other commodity currencies, underperformed the euro. Some of that reflects rate cuts from the Bank of Canada and lower inflation numbers, but, with oil prices hitting records, energy equities close to record highs, and some of the activity figures in Canada holding up better than expected this year. We could see the dollar Canada resume a down move soon.
Oh, no, don't. Well, actually, yes, because, anyway, we won't go into why, but it has to do with the family north of the border there. Hey, the Aussie's holding pretty well, isn't it? I mean, the RBA is standing pat on rates. I think Glenn Stevens and his band recognized that, you can't keep hiking rates into the upper reaches of the atmosphere. They are cognizant of the fact that the average Aussie's mortgage rate is getting a little bit untenable in some cases, considering that there may be a downward bias in the months to come. Isn't the AUD's holding up quite nicely, isn't it? Yeah, look,
and some interesting comments from one of the press commentators down here in Australia, one of those commentators that talks about the RBA a lot and appears to maintain close relationships with officials, saying that the headline was that the PM would welcome, or more or less welcome, a rising Australian dollar to help cope with inflation. And, inflation is still probably the biggest headache at the RBA, well above its target zone. The statement yesterday had a lot of indicators there that rates, if they are going to move, will still move higher. They spoke about a big terms of trade boost, which is coming from coal and iron ore prices, which haven't been set yet. But this terms of trade boost will be the biggest we've seen so far in the whole commodity boom recently. And there's a case there that the economy could pick up again later in the year. So certainly there's no scope for rates to move down, and hence the Aussie is performing fairly well at the moment.
Hey, let me ask you something. When we talk about commodity currencies, we usually link that to metals and oil and all that. But, I mean, wheat is up, corn is up. There seems to be some weather-related problems that may affect the crops there. The rice market saw more traction. The killer cyclone in Myanmar may upset the supply and demand balance. What are the grain commodities, or are there, or is it less well-defined in this space?
Well, it just basically says on a broad scale, whether we're talking about agricultural or industrial commodities, the markets appear very tight. Now, we're seeing slowing in global demand, and we would expect in normal circumstances that we'd start to see commodities start to ebb from here. But the markets remain very tight, and whenever there's supply disruptions, we see potentials for spikes, and that's what's going on. I've been looking at the latest moves in rice and wheat, so I can't tell you where they're trading at today. But one thing I did notice was milk prices surged 3% to hit a new peak in the CME overnight, and that should be supportive for the New Zealand dollar, for instance.
Do you have any kids?
Yes, I do have. I have 2 kids. Thanks, Bernie. Yeah.
And with milk prices the way they are, what are you feeding them? Fosters instead?
Yeah, they do like their milk, and I haven't looked at my own budget lately, but that's something the wife has got her hands on.
Okay, guess you're gonna have to keep your day job. Talk to you later, Greg. Thanks. Greg Gibbsy.
Chris, what are you telling clients to do with the dollar holdings? Do they buy, sell, or hold?
Well, in the short term, the US dollar looks like it could rally further. Obviously, technically, it now has reached a reasonable bottom and is trending upwards. And also the recent data obviously is supporting that move, particularly consumption data and also even the jobs data on Friday night were a little firmer than expected. The Fed now looks like it may be on pause, at least in the money market. So therefore, the dollar does have some momentum at the moment.
And Bernanke is going to be speaking on U.S. mortgage foreclosures tomorrow. Do you think that's going to affect the dollar? What's it likely to signal in growth and inflation?
We're not expecting too much from the speech tomorrow, given that the Fed has said a lot recently and particularly has taken some measures, such as last week, to improve the ability for banks to find liquidity backed by some of that paper that has been underwater. So unless they're planning another major policy announcement, I wouldn't expect the speech itself to signal too much. Maybe there's some comments in there about the state of the mortgage-backed market. They could provide some new news.
So where does the dollar get its support from the near term? Is it going to be in the economic reports, or do you think a potential shift in the ECB's policy bias?
Well, there's the possibility of both. I guess on the data side, there is the possibility that the data keeps coming in on the firmer side. But then again, that won't necessarily be sustained. Even though the data on Friday night was seen as better than expected, we still have had 4 months of job declines in the US. And that sort of momentum has to flow through eventually to continue to flow through to consumer confidence, retail trade, and the problems in the housing market will continue to make the possibility of a risk of softer data eventually. So that data systems won't necessarily be sustained. In terms of Europe, yes, there is a possibility that the ECB may have to change tack, given that they're currently fighting inflation harder than what the market really believes they need to. Then yes, they may change tack and move to a more neutral or even dovish stance. That would undermine the euro. So in that case, yes, the US dollar would gain more support.
And before the ECB meeting, we do get a decision from the Reserve Bank of Australia tomorrow. What are you expecting the RBA to signal, and what is it going to mean for the Aussie and the carry trade?
Well, we would think that there will probably be no change tomorrow. The comments will be very critical. If they do take a little bit of a tack, as I suggested last time, that they are certainly on hold for the foreseeable future, particularly given the global backdrop and some expectations that the weaker US and potentially global growth will flow into our market, our economy, then yes, the statement may sound a little bit dovish, and that could undermine the Aussie a little bit in the short term, but we wouldn't expect the pullbacks to be too dramatic. Okay, good to talk to you. Thanks for that, Chris. Chris Leung of State Street Global Advisors.